So what I'm going to do is just kick the ball off here by asking Elias, with his sort of perspective, having recently been head of a big pension fund, but also having had experience as an asset manager, you know, on the board of his country's central bank, a writer, a very broad perspective. So the big question being, you know, what strategic considerations would you recommend for institutional investors looking to invest in Africa in the next 12 months?
I'll be provocative and look beyond 12 months and look at the role of such investors in the African context. And what I would position as a very important aspect in investing in the continent is a psychological change. Gone are the days where, as a private investor or private player, you leave the investment environment to be crafted by politicians or governments. You're supposed to be part of it. More importantly, those of us who manage sovereign wealth funds, who manage pension funds, there is a very clear correlation between the macroeconomy and asset performance of the funds that you manage. And the nature of the funds being long-term basically means you're forced to take a long-term view in any dispensation in which you invest. And being a long-term player, you can therefore not leave your fate to be determined by governments. You need to be part and parcel of crafting that environment in which you operate. Earlier on, there were questions raised about risk associated with the political environments on the continent, regulatory environments, and my view is that those are transitory and they can be changed and molded to make sure that they generate the environment and the returns that you want as a player with a long-term view. You cannot be passive. You need to be active, particularly in the African context where the capital markets are not as deep as what you see in the developed world. You have no choice. The asset allocation has already been determined for you. To a large extent, if you want to play in a credible fashion, you are left to play in the unlisted space. You don't have the shelter, the cover, or the protection of the listed environment. And that means it really changes the game play. What is interesting is that a year or two ago at the Rio +20, a question was posed: what defines stability in an economy? Players or business people from the developed world identified stability as being characterized by transparent and accountable stock markets. Whereas from an African context, stability was about being able to reduce unemployment through job creation, because if you do not do that, then the environment in which you're operating is unstable. It does not guarantee you the returns that you want into the long term. So the link of the commercial case, the economic case, and the social stability case are very key in operating in the African context. Thank you.
Okay, Elias, thank you very much for getting us going there.
Doing business in Africa. You can't afford to be without Africa Investor.